Hello. Just like my in other videos, let me start this one a little different today. I want to start by introducing you to VIX, or the volatility index. And I just want to first start by reflecting on what today looks like. And today was a very, very strong bear day. And a lot of you who had bet on call options, you probably lost a little bit or quite a bit, if I may say. And let's take a look at the volatility index here and see what we might expect and what might be going on here. Currently, I have VIX on a 30 minute chart or a 30-minute candle, and in front of me, you might see where the day closed today around 2073 there, but also we closed actually at a key level. If we look to the right hand side of that, of this chart here, where I'm highlighting this region here, this is kind of like a resistance level from the previous around August 12th, the earlier last month. But also that is actually another resistance level, um, a mini resistance level sometime back on around, I'm actually exactly around a month ago, July, I mean August 2nd. So with that in mind, we are currently sitting at that resistance, support and resistance level, actual resistance level, not a support level. I don't know if that corresponds to anything further left, but I would assume it does correspond to something further left. So with that in mind, we do know that VIX is a fear gauge, or a gauge of fear, or fear gauge, whichever way you want to put it that makes sense to you, meaning that a rise in VIX increases panic and increases more selling in the market, and a decrease in VIX decreases panic and the more stable the market is. But we do see that today alone, VIX actually increased from 15 to 20. That means there is some pressure or selling pressure building in the market. So you want to pay attention to that. But we have hit that level though of resistance. So there might be some resistance here. So meaning that if VIX do decide to stay where it is right now, we might see some price leveling off. Might be some selling off, which is going to take place, but it's not going to be a very, very aggressive move. So we should still be able to benefit both ways. And if I go ahead and move this from 30 minutes to a daily chart, just so we can get a clear look at this, you will see that where we are today, VIX is corresponding to this point, and also VIX is corresponding to that point, which is a previous support, I mean resistance level. So we have those key levels there, which is acting as our resistance level. And of course, not forgetting, today is right around here, or just not just right around here, but that's where we are today. So any further increase in VIX, say as this week goes, we should see more selling pressure builds up, and we should see more bearish move goes on. But as far as if that start leveling off, we should see that cooling off, and we should see a little bit of a pullback as far as being bullish is concerned. With that in mind, let's take a quick look at actually our famous ticker, which is SPY. But I wanna point out a few things here, which, if you have seen most of my videos, we do have key levels here that got violated today, heavily violated. We had let me actually put it back to a 15-minute chart and reset my chart. If I reset my chart, you'll see that actually it's a little clustered. I am gonna go ahead and remove some of this. Like, maybe not. Let me remove just the indicator itself. I have this orange, or rather yellow zone, if you want to call it. That yellow zone from the top, let me paint it actually red so we know what it is. That is a major resistance level. Um, so we have in the past, since August 19th, around that, we have been oscillating between that yellow resistance level and this orange. I mean, we have been oscillating between that red resistance level and this orange lower resistance level. I mean, support level. So, meaning price has been bouncing off between those two. But also, in addition to that, we do have these mini levels in between the intradays where price do opens within that and bonds oscillate within that, giving us that opportunity to interact with the sideways market really nice. But we have been treating this yellow or this orange support level here as our major support level in this consolidation moment. But what is really surprising that took place or that happened today is that we did break highly, heavily, or rather strongly below that. But look where we broke from. There was a lot of spinning stops right around here, meaning there was some consolidation, really strong pressure around that level before it broke off, and we eventually broke off to the bear side of that, and we did close on the bear side of that. But if we take a look at the E-mini though, um, if we take a look at the E-mini, we will see that actually, let me pull it back again. If I can get it up. E-mini. There we go. All right. If we take a look at the E-mini, we should see that things are still tanking up a little bit. Maybe this will help. All right. We'll see that price closed right around here today, right around here. And that price actually there was a little slight of a pullback right around that, but it's again going to the daily lower low, and we are still sitting around that daily lower low. But because this is a 15-minute chart, yeah, it's going to take a little bit of a time. On a 30-minute chart, we should still see nearly the same thing. We are still at the same area of support and resistance, which I believe if we look farther to the left, we will see that today's level does not really correspond to any strong area of support or resistance in the past. So meaning there is a really high chance of breaking through that. And I think the purple line which I have here is actually, let me paint it a little bit more visible. This I think what I have here is that's corresponding to a consolidation zone on a really far time frame that we would have to break through. So really considering tomorrow, I would, if you do trade with the open range breakout, I would highly follow the open range breakout. In my prediction though, I would assume that we would still be a little bullish tomorrow, slightly bullish, before we can fully break to the downside. Because considering what we just saw today, this little pressure right here on SPY, or rather, if you want to take a look at SPX, if you trade index a lot, that is what you should expect. So around this level, we would expect that pullback to happen on SPX, but that did not happen at the market. At the market closure. But what is really important is that if you take a look at this 30-minute chart, you will see we have this hammer. This is a great signal. We have this hammer. By the hammer, I'm referring to this tall wick candle. That is a really huge buying pressure coming in there. It's coming in hot, I'm telling you. So with that in mind, there might be some bullish trend coming up tomorrow. So just pay attention to that. And again, if you use the open range breakout, it's a beautiful thing. You just wait for everything to open. The first, be it your first 15 or your first 30 minutes, wait for that to open. Whichever side it opens and breaks to is what you go with. In a different way or on another scale, I have this really simplified, but I'm not going to go into detail into my setup yet at the moment. But if you do have questions, just leave those in the comments. I'll be happy to answer some of your questions. So with this in mind, let's take a quick look at what really the offense side of the market is doing. By the offense side of the market, I'm referring to those collective securities which have aggressive moves. With the first one, let's take a look at the technology section. The technology section is identified by the ticker XLK. If you take a look at XLK, you will see that this is SPY technology sector. The technology sector is just exactly as the same as what happened today on with the SPX. It's kind of, it replicates the SPX chart, but not every single one of them replicate the SPX chart. If I reset this a little bit, you'll see that this leveled off a little bit ago, and we have been having this sideways move going on. So with that in mind, let's take another look at the consumer discretionary portion of the market. If we take a look at the consumers, you will see that actually, if you are wondering, consumers is identified by the ticker XLY, and consumer discretionary right there. You will see that the consumer discretionary is also in the same boat with the technology section of the market, and we are both of them. They ended the day with this tall wick here, the hammer here. This hammer just is signaling some some buying pressure coming in, and you might realize that that is within the zone which has been actually, if I can draw a line right there, it's been around that. If we treat this to be a liquidity run right here, we treat that as a liquidity run. That sets this zone to be, of course, a zone is better to be drawn as a box, not as a line, for more accuracy. Let's just grab this and draw a zone right there, simply because we have this touching that zone, and then we have another line here touching that zone, and we have another line here touching that zone, and finally, of course, we have this liquidity run touching that zone. So we call that a zone. Both of the day closed within that zone. With that in mind, yeah, we are still within the same boat with consumer discretionary. But if we take a look at the semiconductor, for those of you who like trading things like AMD, Intel, and all that, let's take a look and see what that looks like. And the semiconductor is identified by the ticker SMH, if you will. So the semiconductor is also in the same boat as the rest of the of the securities. We are all kind of trailing down at the moment. This nothing out of the extraordinarily, which is too far from each other's. But that is on the offense side, or those which has the risk on. There is one last one though that I need to check on, which is ARC. That's with ARC being the high growth. And this might, I don't know how this will play along, but this yeah, we are still on the same boat, all of this. But on the defense side, let's just take a quick look at the utility part of it, which is XLU. You will see that the utility is a little bit just constantly on the uptrend. With that in mind, you can still, if you're call option trader, you can still continue trading your calls here. And if you like to use open ring breakout, like I would say, there is some potentials there for you to keep using the open ring breakout. So with that in mind, let's get back to to the key point of this quick analysis. So if I'm to give you a summary, I would say that looking at the offense, we do see that there is some pressure or selling pressure coming in, which ultimately will drive the rest of the market a little bit down. And let's take a look at using SPX. Let's take a look at what would be probably the key levels to watch for here. And if you will, note that I have the ATR indicator here, which I've turned on, and I'm going to move my chart from 30 minutes to all the way to a daily chart. So if we decide that, if this decide that today is was a breaking point to the downside, we are looking at this. Previously, it was our resistance. I mean, the resistance level right around here. And by that resistance level, I'm referring to this point here where we had that spinning stop or consolidation. So we would hope to to ride this a little bit um, to this level here, to this zone here, which is around 53.46. But by the time we reach that 53.46, we should be able to see that pull back a little bit. But that again, that there's not a lot of activities that took place within 53.40. I mean, within that zone. But that's a good target for us to hope for. So that's the only support level that I can see. But keep in mind there is this a little bit here, 53.91, which is, let's call it actually 5400. Okay, let's call it a 5400. At that 5400, we do have some level of resistance there, and actually there was some previous level support, which might be our current level of resistance going downtrend. But considering that the market had been on an uptrend for the most part, that might be a really strong a level of resistance this time around. Meaning that there can be a bounce off from there, and that bounce off might get picked up really, really, really strongly with a pullback to the upside. So want to keep an eye on that. But on a shorter time frame, we do see that. Actually, let me reset my chart a little bit. On a shorter time frame, you do see that we are approaching, that level where we have nothing in within where we are to stop us from running down if we do open below or within the closing of today. So just keep that in mind. So you wanna check that and keep that in mind. But someone might be asking a question: why did you bring this ATR and decide not to talk about it? This ATR is here just for the purpose of, if you decide that you want to trade your put option or call option, and you want to decide where your stop loss should be depending on the current volatility. It's highly advised that it's highly possible that you should use the ATR for setting up your stop loss, meaning that the current price is 55.28. You can set your stop loss one ATR below that or one ATR above that, depending on whether you're selling calls. Depending on whether you're trading calls or puts. With that in mind, how that works is that you would have your current price here, 55.28 minus the one ATR. One ATR is 15.3 right here. Current ATR value is 15.3, so that would be 55.28 minus 15.3, whichever value you have on your screen. That will be your stop loss, which should be 54 something down here. Or 50, 55, 55.5 or 55.10. That will be your stop loss. A little bit lower or a distance away from this from the previous low. The previous low is going to be around 55.06. You don't want to put it there, because if there is a slight pullback, which is a liquidity run, you don't want it to come back and sweep your stop loss right away. You want to stay in the game. So meaning a stop loss, a reasonable stop loss would be right around here, right around 54.81, perfectly fine. And then if that's only if you're trading calls, but if you're trading puts, that would probably be right about, let's see, there was a little bit of consolidation here, or this was a previous major zone. You want to set it a little bit higher than that, not at the zone itself. That's 55.97, around that. So just play around with that, do your research, ask questions, check and reevaluate your work before you can react on it, and just let's discuss. Okay. Check back later and just let's have a talk. It's and you have a good time. We'll check back with you later.